Today I'm going to be talking about a company called ImmunityBio. I've already added this company into my favorites and I'm looking forward to the months ahead. Now clicking into ImmunityBio, we can see here that it's currently sat at $3.08. It's currently having a slight update and it's valued at around $2.6 billion. In this video, I'm just going to take a moment to talk about this new page that I have in Ticketaco, which is going to be very useful for exploring this stock. After that, I'm going to be going through the bull and bear points of ImmunityBio, then followed by the up-and-coming catalysts, which I really recommend you stay tuned for because there's a lot coming up this year. And then finally, I'm going to be taking a look at the stock price, doing a discounted cash flow, and see where I think this company should be valued. So let's start with this new links page. Now, this page is super useful for anyone researching stocks. It provides links about the most important information about a stock. Here, for example, we have the investors relations on the company website. Arguably the most important, we also have the stock twits page. Other links that I use all the time are the financials here. That has the income statement and the balance sheet. The balance sheet is really useful for finding out the share dilution. Also, I really like the articles from Seeking Alpha. This not only gives the authors insights into the articles, but you also get the comments which can provide counter answers to the author's opinions. And you also get the transcripts, and transcripts are normally one of the most important parts about a company for me. That's where you get to hear the earnings call. Unfortunately though, for ImmunityBio, there are no earnings calls, which is something I'm going to be talking about a bit later in the bull and the bear points. Other links available here include the stock charts, the SEC filings, analyst ratings, institutional ownership, insider trading, short interest, and earnings call calendar. So altogether, this one page can link you into nearly everything you need to know about a stock. I know a lot of you are starting to sign up for Ticketaco already, but if you're not, please come and take advantage of these free features. Okay, so let's move on to the bull and the bear points for this stock. So I'm going to start here with the bull points for the stock because it really defines the story about this company. And that story begins with Dr. Patrick Soon-Shiong. If we click in here for more details, we can see here that Dr. Patrick Soon-Shiong is the billionaire executive chairman of the board. Being a billionaire has its advantages, and he has been lending money to ImmunityBio to support its operations. So when it comes to finances, we don't have to worry that ImmunityBio won't be able to reach its goals. He has also previously created the highly successful cancer drug Abraxane, which is pulling in around $1 billion a year. And he owns 82% of the company, so he has a vested interest in its success. Something like this doesn't guarantee results, of course, but it does mean that the sole intent of this company isn't just to create money for its employees. Dr. Patrick Soon-Shiong already has enough. And on top of that, it means they don't have to rush to their goals to complete them before they run out of money. So this really does attract me to the company a lot more. So Dr. Patrick Soon-Shiong is responsible for IOVA. And IOVA could be a revolution in cancer care. It's really quite incredible the breadth of effect that IOVA could have in the cancer community. We can see here that they already have another 10 indications for IOVA. This includes advanced solid tumours, colorectal Lynch syndrome, glioblastoma, HIV, HPV, non-Hodgkin's lymphoma, and lung, ovarian and prostate cancer. If they can get enough of these indications, then that means that this drug could quite easily reach the double-digit billion-dollar figure. Traditionally, doctors have tried to cure cancer by attacking the tumours. However, what IOVA is doing is helping the immune system so that the immune system can then attack the tumours. This is quite revolutionary because chemotherapy before was actually damaging the immune system, and Dr. Patrick Soon-Shiong likened this to winning the battle but losing the war. So IOVA has already been approved for bladder cancer, and it's got a very high complete response rate, as we can see from the sub-ball point here. And on top of that, the durability is really high. We're talking about 54 months of durability here compared to only 12 months of Keytruda. Now this is an absolute game changer in the market, and I've little doubt that this is going to be the standard of care for this type of bladder cancer. However, as Dr. Patrick Soon-Shiong has said before, this is a complete paradigm shift in the market. Doctors have really been quite used to trying to attack these cancers with chemotherapy, but now they're going to have to be taught to stop that in order to use this new therapy. That might not apply so much for this type of bladder cancer because this is put in combination with BCG. BCG helps the immune system to identify cancer cells and attack them. And when you combine that with Anchiva, which boosts the killer cells and the T cells, which are going to attack the cancer, then that's a powerful combination. So for patients already on BCG, there isn't actually much change. And this is one of the things that the clinics really like about this drug. They don't actually have to change too much about what they're doing in order to include this combination. However, in order to get patients who are using chemotherapy to start using Anchiva, there might be a bit more of a barrier. A sub-bear point for this is that other cancers may behave differently. So non-muscle invasive bladder cancer is very unique in that drugs can be placed into the bladder fairly isolated from the rest of the body. This means that the cancer can have much higher exposure than other cancers. We can already see that with non-small cell lung cancer that the effects aren't quite as significant as the bladder cancer results. And this also means that other results for cancers can't be guaranteed. I'm very hopeful for Anchiva indeed, but it's certainly not yet a slam dunk. Another sub-ball point is that they're looking at recombinant BCG manufacturing. This is because there's a BCG shortage in the market at this moment. If they can manage this, not only should they be able to achieve a margin, but it might also start to make Anchiva synonymous with BCG. A negative to this though is this is a very, very highly competitive area. I really can't overstate that enough. There's all the big names in the market are looking at one or many of these indications. So this really is a race to see if Anchiva will come out on top. One sub-ball point I would say to this though is that I have done some research into some competitors' drugs and I found out that Anchiva does look like it would be winning in these cases. However, there's just too many drugs and trials for me to take a look at all of them at this time. Okay, so heading back to the main bull and bear points. So it's only those two top level ball points, but they are both very significant indeed. If Anchiva can reach its potential, then this is really going to be a revolutionary drug in the same ballpark as Keytruda. I'm going to move on to the bear points now, but keep tuned for the catalyst coming afterwards, because this is really an exciting year for ImmunityBio. So first in the list of bear points, and bear in mind these are ordered by priority, is that the company is very information frugal. Now normally I would stay a mile away from a company like this, but given the advantages and the recommendation made by Soulman, I wanted to dig deeper. So if we look into deeper details of what I mean by this, a big one for me is that they don't do earnings calls. Now normally the earnings call is a great way to hear about the company, what they have planned for the future, what they achieved in the last quarter, but also it gives the analysts an opportunity to ask questions and a place where you can really hear the tone of voice and the vibe of the management. For me, when I'm making an investment, I don't normally like putting all of my trust into presentations alone. The other thing I'm not so keen on about this company is that they don't release precise catalyst dates. So all the catalyst dates that I have are just for this year, sometime within this year. And the other thing is they don't provide market TAMs either. So it's very hard to try and figure out how much they are hoping to make from Anchiva. Hopefully, as they progress as a company, they will start to do these earnings calls. But to be honest, I'm not going to hold my breath. Next in the list is the significant cash burn. And this really is significant. Last year, they burnt around $500 million. And that really comes into my next two as well, the high debt and the high dilution. So they now have over $1 billion worth of debt, and they've diluted the company 50% in the last 5 years. But because of the cash burn, they are going to need to continue raising money. So that means higher debt, higher dilution, or both in the coming years. As we're going to see in the discounted cash flow analysis, it's going to be years before their current indication covers costs, even if it can. And given the significant cash burn, it really affects the discounted cash flow. But more on that later. Okay, so that's the main bear points about this company. They are also quite significant, but let's hope the potential of Anchiva is much stronger. So the catalyst coming up, this is a really important section about this company. If you're going to be a new investor here, then it's a really exciting year for this company. There's a lot coming through this year. I'll have to go through it quickly, and then if you want more details, then come to Tikataco and check out the descriptions. But we have the papillary bladder cancer. Now this is 3 times the size of the bladder indication that they have already, so this is really important. They're going to be making the submission, and then I'm just going to skip over here because we have the acceptance a bit further down. And then we are hoping for the PDUFA decision before the end of the year. Now this has the potential to really affect the stock price for this company. And one of the dates I'm really looking forward to is the Q1 2025 earnings call. Now that's estimated to be on the 8th of May. And what I'm hoping to see from this is the sales from the current bladder cancer indication. Now, as we're going to see from the discounted cash flow in the moment, we really need to see growth in this sector so that they can combat the costs that they have within this company. I believe that we're going to see good growth for that indication, but we're not going to know until we get those results. So also up and coming this year, we have the phase 2 results from the colon cancer. We have the lung cancer phase 3 results. And I actually think this is more important than the BLA for the bladder cancer later on in this year. And the reason for that is that the lung cancer market is 5 times the size of the bladder cancer market. So getting good phase 3 results here is going to be a big deal for this company. We're then going to be able to see their BLA filing for that, and then hopefully the acceptance of the BLA filing. And then probably towards the end of the year, we're going to see the FDA filing for the market access of their recombinant BCG. I'm probably not expecting too much of a move from that catalyst, but it should solidify them in the bladder cancer market. So the catalysts for this year are extreme, and you would expect that from a company that has so many trials. But this is way beyond any other company that I've looked at before. But those trials, as mentioned before, do come with a cost. So on that note, let's go and take a look at the stock price and the discounted cash flow for this company. So let's go and take a look at the stock price for now. And we can see it's had a pretty rough time recently. It went from a high of $9 around May of last year, and it's currently sat around $3 at the moment, although it's been fairly steady there for the last 4 months. The market cap is sat around $2.6 billion, which is a lot of money for a biotech company at this stage. So let's go and take a look at the discounted cash flow. So I use these really simplified discounted cash flows just to make everything easy to understand. And we can see here that I've started off with a negative net income here of $500 million. And the parameters that I put at the moment is that the company is going to be growing at $1 million per year. That is based on the $6 million per quarter that they got in the last earnings for IOVA. And as you can see, the company is negatively valued, and that's really not a big surprise. And this isn't even taking into account the debt that they have on board. That would actually represent a negative value for the company of around $2 billion. But of course, they're not expecting to grow at only $100 million per year. Now, the TAM for the bladder market is around $4 billion. So let's say they get all indications for bladder cancer that they are targeting, and they can achieve $2 billion sales for IOVA. We can up this to 200. We can see here that we're starting to get much better numbers at around $1.6 billion. However, we still need to get to $3.6 billion in order to justify today's price. And that's where the non-small cell lung cancer could come in, which I'm hoping will be launched in the first half of next year. If that is the case, then that's 5 times the market of bladder cancer. So instead of $2 billion a year, we could see up to $10 billion a year from this company. So if we increase that 200 a year to $1 billion a year, and then what we want to do, we want to up that so the maximum they can earn is $7 billion in 1 year. That takes into account gross sales. Copy that over. Okay, so we now see much more attractive figures starting, and we can see the company valued at $20 billion. That is very significant indeed. However, you have to bear in mind that that would mean the company getting $10 billion a year in peak sales. Okay, so just for clarity here, I wanted to show how much the company would have to earn to justify its current market value. And that's coming at around $300 million growth per year, which would equate to around $3 billion peak sales. Of course, this is just talking about the financials. It doesn't talk about any other assets or pipeline or anything like that. So you have to take that into consideration. But it does paint a picture of how much potential is already baked into this company. So with this company, you really have both sides of the scale. You have the fact that it's really overvalued for the fundamentals at the moment. And then on the other side, you have this incredible opportunity. Personally, I think the opportunity outweighs the risk here. And when I have some spare money, I'm going to look at investing into this company. I think the prospects for IOVA look strong, and it's a risk that I'd be willing to take. I'm certainly going to be keeping a close eye on this company in the months to come. If you'd like to be kept up to date with any research that I do, you can come and favourite the company here. It's already favorited on mine, but you can click that. and then I'll re-click it again now. You can see it's been added to the favorites, and then on the home screen you'll have it in the favorites tab here. And also you can get individual updates on the points by clicking here, and also for clicking here for the catalysts. If you've liked this video, please like and subscribe.